Welcome, everyone. So today we're going to talk about the PPP second draw, which, as we understand it, we think all banks are accepting the applications today, so it's timely. But we're going to take you through the second draw today, and you have me. I'm Jeff Lair. I'll change my name here. Jeff Lair, COO and CMO at Rosenberg Chesnoff. I also work on helping businesses overcome growth plateaus and put their growth programs together. And then Jody Chesnoff, managing partner of Rosenberg Chesnoff. You want to just say a couple of words, Jody, for anybody who doesn't know you?
Sure. I've been managing partner with Rosenberg Chesnoff for the last 4 or 5 years. I see most of the people on the call are clients, so we all know each other well. I've been with the firm about 15 years, and we focus on really bringing transparency and clarity of financials to all of our clients to give them comfort and feel secure about where they're going and what they're doing.
And our role is really to go above and beyond just the accounting work to get into providing this advice and helping people sort out the business and professional issues, as well as individual tax issues that they have, just going beyond just the numbers to help figure out how to go forward. So without further ado, we'll go into the program. Just a couple of housekeeping and agenda items. Please type questions into the Q&A so we can get to questions as they come up. We have some questions. We have some questions, and we will let you know. We cannot speak or show video. Yeah. So we will, and then we have some questions we've already gathered from you guys. We will go through those, and then we will open things up to Q&A. The plan to cover today is the new PPP loan, some key definitions, some key changes from last time to this time, and we're going to talk a bit about forgiveness before we get into that Q&A. And I'll start with this idea of first draw versus second draw. So just to be really clear, there are two loans. The first one is the first draw on the PPP loan, right? And that was the initial PPP loan back in April. And if you didn't apply for the first draw, you can apply for the first draw now. That is open again. The second draw is the new PPP loan. That's the one that is available now. If you already had a first draw, the legislation was signed in December, and as we understand it, most banks are accepting applications now. There was sort of a soft launch last week. Some smaller community banks got first access, but we think that all banks are really accepting applications now. We got a notice from Chase saying that they would be accepting applications today. So we think that most banks are opening this up at the moment. And what we're going to talk about primarily is the second draw and some of the changes that have come up as a result of the new legislation. Just to be clear, if you didn't get a draw, if you didn't get a first draw loan last year, you can apply now. Now, one of the questions that has come up is the second draw and expansion on the first draw? And the answer is no, they should be two separate loans. But there are some cases where if you didn't get the full loan that you were entitled to in 2020, you can apply for an increase. And we have to be honest with you here, we're not exactly sure who and when. The idea is if you didn't get the full loan, if you gave some of it back, if you didn't take the full amount that you were entitled to, then you can apply for an increase. However, rule changes don't seem to be a reason, and mistakes don't seem to be a reason. Does that sound right, Jody?
That sounds right. They're not clear yet as to what the reasons are that you will be able to do this, but it's out there. So once we get that information, we'll pass it along. One other thing to think about is back in March and April, there was a mad rush to get these PPP loans because they ran out of money the first time around. I was on a conference this morning with the head of the AICPA, who's pretty confident that that is not the case this time, that they're not going to run out of money the way they did last time. So there is no mad rush to do it. However, the sooner you do it, the sooner you can have access to the cash.
So let's talk about second draw eligibility. So remember, first draw is the first loan, second draw is the loan that is available today, and it is not an increase, it is a second loan. So if you are eligible for PPP1, you will be eligible for PPP2 with these exceptions, okay? First, you must have had a first draw loan, and you will use it by the time you get the second draw loan. So if you were eligible and did not have a PPP1 loan, you should go back and apply for the PPP1 loan. You have to have 300 employees or fewer. This was 500. They made it 300. And then here's the big one. You must have a comparable quarter decrease of 25% in gross receipts. So this is new. And what it says is that you have to compare two quarters, one in 2020 and one in 2019. And the one in 2020 has to be 25% less than 2019 in order to qualify. You can pick whichever quarter you want to compare it to, and show
it has to be the same quarter. So if it's Q3 of 2020, it has to compare to Q3 of 2019. You can't pick Q3 and then Q1 of the other year.
So that's the big change is now there is that revenue. And it does include, just as it included last time, it does include sole proprietors, independent contractors, and self-employed individuals. So we'll go through a little bit more on the second draw. It's available now through March 31st. The maximum loan amount is $2 million. This is down from 10 million in the original. Generally, it's for 2.5 times average monthly payroll costs, just like in the first PPP loan, right? However, restaurants and hotels, or any business with an NAICS code 72, which I think is restaurants and hotels only, but there may be some others in there, can apply for a 3.5 times average monthly payroll cost. So if you have a restaurant, you get 3.5 times rather than 2.5 times. You can use 2019, 2020, or the 12 months prior to the application to calculate your payroll amount. I think in almost every case, the 2019 is going to be the best option. But you know, if you're in an unusual circumstance, you have a couple of different things here. The nice thing about using 2019 is it's basically the same application as last time. You just have to show that difference in quarter-on-quarter revenues. Seasonal businesses can use any 12-week period between February 15th, 2019, February 15th, 2020. Same thing as last time. And for the covered period, so the period that you have to spend the money, you can choose between 8 and 24 weeks. Did I miss anything there, Jody?
No, that's right on.
So when we get to looking at those two quarters and looking at quarter versus quarter in 2020 versus 2019, the big question that comes up is, what are gross receipts? So gross receipts, you have to compare gross receipts in one quarter in 2020 to that same quarter in 2019. So what are gross receipts? All revenue in whatever form received or accrued, and that depends on your accounting method, from whatever source, right? And that's sales, interest, rents, royalties, fees, commissions, any source of revenue to you, except the first draw PPP loan. That does not count in gross receipts.
Right. Now, there was a question that came in about what constitutes a quarter. So the quarter is March 31st, June 30th, September 30th, December 31st. The actual quarters is what they're looking at right now.
Right.
Calendar quarters.
Those are the quarter ends. So, you know, January to March 31st, and then April 1st to June 30th. And probably, I think in almost every case, Q2 was the worst quarter for everybody, right, Jody?
Yes, I would say so, yes.
I think that's what we've seen. So you're probably, and you know, it might be different for you, but you're probably looking at that April 1st to June 30th time frame. So these are your gross receipts. This is what you have to compare year on year. Now the question is, how do you show that difference? You really show it using your P&L. So your profit and loss statement from one quarter to the next quarter is going to be the best way. For cash businesses, you can also show your bank receipts and inflows and outflows from the bank.
Right. When Jeff says cash business, he's talking about your method for taxes.
Right.
If you're on the accrual basis for taxes or the cash basis for taxes, you utilize those same numbers. And the bank statements will provide that if you don't have interim financials that you can provide from QuickBooks or someplace else.
Now we get into the how here. So you'll do it through your bank. Now, the beauty of this is you're doing it through the same bank that you did last time. So they should have all of the information from the previous application. So you should just have to add in the information. We think that they're available everywhere as of today. You use the same information that you used in 2020, except that if the loan is over $150,000, so if you qualify for more than $150,000, you will need to show that revenue decrease now at the time of application. So you will have to have that profit and loss statement, or you'll have to show those bank transactions now. If the loan is under $150,000, you will need to be ready to show a revenue decrease when you apply for forgiveness. So they won't ask you for it now, but you might as well have that ready because you're going to have to show it when you apply for forgiveness. There are also a few key changes in terms of forgiveness and in terms of both loans. And the first is that the EIDL advance is no longer subtracted from forgiveness. So there was an advance that a bunch of people got in the second quarter of last year, up to $10,000. And up until now, we've had to subtract that from the forgiveness amount. We're no longer subtracting that from the forgiveness amount. So that's a change. The next change is that the PPP loan is tax-free. You will not pay tax on PPP, and you will still be able to deduct expenses. And there will be a new simplified application for PPP loans, first draw PPP loans, and then second draw PPP loans that are under $150,000. So this application is not yet out, but we expect it to be here very, very soon. Because they had 24 days to come up with the new application, and those 24 days are up on the 20th. So I would expect to see that new application soon. I mean, it may have come out since we started this presentation, but it should be a lot easier where you just have to go in and certify, yes, 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 yes. And they reserve the right to audit you, but at the end of the day, it reduces a lot of the actual submissions and information that you have to provide to the bank. So that brings up the next question really around forgiveness. What is in forgiveness and what do we have to do for forgiveness? So, forgiveness is going to be the same as before. However, in addition to payroll, rent, and utilities, so this was the forgiveness that was allowed last time. So in addition to payroll, rent, and utilities, the money spent on these expensive categories will also qualify for forgiveness. Software and cloud software fees. I mean, we got asked this question a million times last year, Jody, remember? Right. So now these are in fact allowable expenses. And property damage costs that are not covered by insurance. Supplies essential to a business ordered before the covered period, and perishable goods ordered during the covered period. Operating or capital expenses to adapt the business to comply with the health rules. So these are all new categories of forgivable expenses. Now, remember, you can spend the loan on whatever you'd like, but in order to qualify for forgiveness, you have to spend it on forgivable expenses. And to qualify for PPP2, you will have had to have spent PPP1 on forgivable expenses. I think I didn't mention that earlier, but you spend PPP1 on forgivable expenses, then you can qualify for the second draw. But you do not have to apply for forgiveness before you apply for PPP2. So there's a little bit of, I promise I did the right thing going on here. Anything I missed, Jody?
No, there is a question out there. It says for less than 150K loans, you don't have to show quarter-over-quarter decline until forgiveness. So on the PPP1, there's no quarter-over-quarter reduction that you have to be concerned about. But for part 2, there is. And the question is, what if you're not able to show forgiveness? And what are the terms of the loan if you don't get forgiveness, right? So if they don't qualify for forgiveness and they get a second loan, I assume it's the same situation as the first, where you will owe back the money over a period of time with a low interest rate.
Yeah, you owe back the money. It's a 5-year term at 1%. Thanks for that, because we completely forgot about the non-forgiven loans here. And I'll check on that 5 years. I don't think that that's changed, but I'll look into that. And but yeah, if it's not forgiven, then it becomes a loan. And it's a decent loan. It's at 1%, and that's a pretty good interest rate.
There was another question that came in regarding forgiveness and the confusion around it. And since Rosenberg and Chesnov already has our financials, can we just provide a spreadsheet with payroll, software, and other eligible expenses that they need to submit? And yes, of course, if we have that information, we're happy to do it. And since this came in from an anonymous attendee, if you email me separately, I can absolutely help you with it. But since you're anonymous, I don't know who you are. There were a couple other questions regarding this. One question came up: if you're a food distribution company, does that qualify you for 3.5? We'll have to look at your code and see if that actually qualifies or not. But I'm not sure at this point.
Do you know what so the person who asked that about the food distribution, do you know what your NAICS code is? Because the key is that
we know it. We know it, and I'll check and I'll email him directly about it afterwards.
Okay, great. So I'll go through. So I'm going to. There's another aspect of this that I want to bring in. So we'll go through the employee retention credit and then get into some more Q&A. Jody, does that sound all right?
That sounds fine.
Okay. Do you want to talk about this one?
Sure. So we're going to speak briefly. I don't know if you changed your slide. I don't see it yet.
I'm changing it now. Here we go.
Okay. There's an employee retention credit, and I don't want to confuse this call and throw too much out there. This is something that we'll talk about in a week or two. We'll do another webinar on this. But basically, in the past, most people didn't qualify because they received PPP money. And the new rule came in that even though you received PPP money, you still could qualify for an employee retention credit. And for 2020, if one of your quarters over the prior year's quarter was down over 50%, there's a possibility that you could get back $5,000 per employee as a credit. You can't use the same expenses that you use the PPP loan for, but if you continued to maintain people and you had this cost, you can get up to $5,000 per employee. So that's something we'll look at in the next week or two. It's a little complicated. It's simple to get because all you have to do is file an amended quarterly return and add this and you'll get the refunds. But it may take 3 to 6 months before you receive this money because the IRS is very behind in a lot of these things. For the 2021 year, it's a little bit easier to qualify. You don't need a 50% reduction. You need only a 20% reduction in your gross receipts. And then you can get a $7,000 credit per quarter for 2 quarters if your revenues still remain low. So again, this is going to be, it's a little complicated. I don't think we should cover it here because there's going to be a lot of questions with it. And we already have a lot of questions on the PPP. So we'll deal with this in the next couple of weeks. But again, the key here is you can't use the same wages that are being forgiven in the application to use for this credit. But there is a substantial opportunity here, and we'll discuss it in the future.
Okay, so that's the employee retention credit. And then we'll go just through some of the questions that came up. Do I need to apply? Do I need the first draw to be forgiven before applying for a second draw? The answer to that is no. How do I show a quarter decrease? So the bank should accept, again, the P&L, a P&L, and they should accept bank statements and really anything you have that's showing that decrease. But I think just showing your profit and loss statement is going to be enough for them. Then there's the question around when do I need to show the decrease? And if your loan is greater than 150,000, you show the decrease at the time of the application. If the loan is less than 150,000, you show the decrease when you apply for forgiveness. And if you can't show that decrease and you have the loan, then presumably it will be turned into a loan at that point. The next one, but I do think, by the way, you have to certify when you apply, you do have to say, I had this decrease. So it's not clear what the rule is going to be if you actually don't have the decrease. People make mistakes, so that could happen, but we're not clear on exactly what they do if you didn't have the decrease and you apply for forgiveness. But presumably they will turn the PPP into a loan. If my first draw is 80,000 and my second draw is another 80,000, is my application for forgiveness 160,000? And we think not, and that there should be another zero there, but we think not, right? We think that each loan is separate, but I haven't found anything that is specifically addressing this. Everything is written assuming that there are two separate applications and two separate applications for forgiveness. So I think that's the way it's going to be, but I haven't seen the question specifically addressed anywhere. And is the PPP second draw an increase on PPP1? No, they're two separate draws. So I did see someone with a question coming up about their bank saying, oh, you can't apply for an increase in PPP1 at the moment. That's fine. You're not applying for an increase if you're applying for PPP2. PPP2 is a second draw. It's not an increase. So that's where we are on that. So those are the questions that came in. Jody, anything you want to add? We can start going through the Q&A here.
Sure. One of the questions was, can you get the loan even if you can't show quarter-over-quarter loss? You just won't receive forgiveness for PPP2. No, you cannot qualify to get the PPP2 loan if you do not have a decrease in revenue. You can still get a PPP1 if you haven't applied for one yet, but if you apply for PPP2, you have to have that decrease in revenue. You can't do it without it.
Yeah, the decrease is what happens if you can't prove that at the time of forgiveness, and we don't know. But the legislation is pretty clear. If you don't have the decrease, you don't qualify.
And is the decrease on gross income or profit? It's on total revenue received. So it's not about your profitability. It's about if your sales and any other revenue you collect is down by 25% or more. One of the questions was regarding owner's compensation, guaranteed payments, owner draws for LLCs and partnership. Do they count? Yes, they count. However, they have to be guaranteed payments. If they're just pass-throughs, there's a question there. So it should be up to whatever your profit is, whether you draw it out or not. You should be entitled to up to $8,333 a month for the 2.5 months. So it should not affect a partner is the same as an employee, even though they're paid a little bit differently. And can an LLC without payroll apply? Yes, you're considered self-employed, and you're allowed up to that $8,333 times 2.5 months. So you'd be allowed to apply for that as well.
We also have, wasn't the first PPP for a specific period of time in 2020? Can the PPP2 loan be for that same period of time, or does it have to be different? I'm not sure what the question is. There was the PPP loan, the basis for the PPP loan can be the same. So you're looking at the same period for average monthly salary that you were looking at last year. And then the payments had to be made initially over an 8-week period, and that was extended to a 24-week period.
Yeah. So this is going to be the same going forward. I think the question is, when do we spend the money? And it's going forward from when you get it.
Right, and you have 8 weeks or 24 weeks from the time you get the loan, and you make the choice, whichever one you want.
One person asked, and this is a very important one, has the IRS indicated if the first PPP loan is tax-free? So for a while, we were telling everybody that it's not tax-free because that's what they said, and it was going to be considered almost like a grant. However, they've changed that to make it 100% tax-free, so it's kind of a tax-free gift, and it becomes income on your books, but it's tax-free income, so you're not going to pay any tax on it, which will end up generating losses for a lot of people on their tax returns for this particular year.
Okay, we have a question here. Are these expenses that have already happened, or does this include new expenses? I'm understanding it right if I say that once someone receives the PPP loan, they have 24 weeks to spend the money. Correct. Once you receive the PPP loan, you have 24 weeks to spend the money, and it's on expenses accrued or incurred during those 24 weeks. How do you show proof that the money was spent on the right expense categories? Well, that depends on your expense categories. For most people, the payroll, since you only qualify for 2.5 months of, 2.5 times your average monthly payroll, most people are qualifying just by showing their payroll expenses. So you can use your payroll providers, a report from your payroll provider. You can use receipts. You can use whatever information you have to substantiate. Let me get rid of that. So whatever information you have to substantiate your loan, to your expenses, you can use there.
The question came up again. I just want to be clear with everybody. Do you need to apply for forgiveness before applying for PPP2? And the answer is no. You don't have to apply for forgiveness yet. You can apply afterwards. And isn't a simplified form coming out? Yes.
Yes.
It's supposed to be coming out. We expect it to be any day. However, the government has been a little busy the past week or so and continues to be busy over the next few days. So we're just not quite sure how fast it's going to come out. But it is going to come out, we hope, later on this month.
Yeah, so it should come out soon, and we'll certainly expect it to come out soon, but we haven't seen it yet.
Jeff, there's a question about reduced headcount, and I just want to understand that for sure. That's no longer the case, right? We don't have to worry about reduced headcount if we were affected by COVID, and or we couldn't find anybody to replace them with, and or a few different other things.
Yeah, so the rule is still there, but essentially you get out of that rule by being affected by COVID. So if COVID impacted you, then the headcount reduction isn't a problem. However, there is still a clause in there about a 25% reduction in salary. So if you're reducing salaries by 25%, that will impact your forgiveness. Headcount reduction doesn't. You just have to certify that you were impacted by COVID, and because of that, you had to reduce headcount.
There's a couple of questions on LLCs. One is is transferring money weekly from the business to the personal bank account enough to substantiate? Yes, it should be. I don't even know that you have to do that because the money actually belongs to the LLC owner. And as far as there was another question about an LLC without an employee. This particular instance, the person is talking, I think, about a real estate LLC. And in that instance, it won't apply to someone because this is passive income. If you have if you have two companies, you can't apply for yourself on both companies either. So if you do have a company and then an LLC separately, you cannot apply for both. You can only apply through one. You are limited to reimbursing yourself only that $100,000, annualized number from one company, not each one that you have.
Okay, we have for a 2.5 times application, what is included in payroll? So payroll includes it's the same as in PPP1, but it's including all payments to your clients, to your employees. It includes healthcare and benefit coverages, and it excludes some tax payments. So that's, and I'm not sure what you mean by the $100,000 max. Oh, the $100,000 max. Yes. So $100,000 is the 100,000. So salary is capped at $100,000. So that means it's $100,000 over the year. And if you have $100,000 over the year, it's what, 8,333, right?
Right.
You just take that 100,000, divide by 12, 8,333. So that means that the most you can claim for any individual is 2.5 times that. So times 2.5, right? So 20,833, and that's how that works.
Right. So if you were making $15,000 a month on salary, you're only going to be able to apply for $8,333 a month on the PPP loan. Someone asked a quick question on the employee retention credit. Is it new with PPP2? No, it's been around. However, anyone who took a PPP loan did not qualify for this credit, and now they've reversed that and said that even if you did get a PPP loan, you can now qualify. However, you can't use the same money. So if you're using payroll for the 8 or 24 weeks to be forgiven on the PPP loan, you can only use the payroll after that to be able to qualify for this employee retention credit, which again, we'll get into a little bit more in the next couple of weeks. There's a lot there, and it's very confusing the way they're laying it out right now.
Yeah, we do also have a comment. Be careful, JustWorks automated PPP payroll reports fails to count payments to owners. That's often true. So just be sure that you look at those reports and make your the necessary adjustments.
Yeah. So in many instances, remember when you're applying for forgiveness, if you're under that hit 150,000, you're not going to need to submit anything, but you should have those reports available to you.
Yeah.
So that if they ask, because they may be spot checking in the future, and they may request a documentation to show that you actually did qualify. So I would gather that data today and keep it handy when you apply for forgiveness.
So that's a really important point, because they are making forgiveness easier with the shorter application, but they retain the right to audit. So I'm sure they will be spot checking a few of these and having some conversations. So it's good to have your supporting documentation available. One of the things that we have seen with the forgiveness is just that you go around and around a bit with the bank, and they they want this document that way and that document another way, and then and I think what we're doing is avoiding that for a lot of these small applications. But you should definitely have your documentation ready to go. No, there's a new, is the application form for PPP2 the same as PPP1? No, there's a new application form, but you'll do it through your bank. So the bank should have it built into their website, to their portal, to the way that they do business. So you should be able to just go in and upload your P&L for those 2 quarters and apply that way.
What you will need is your loan number for the first loan, because they're going to probably request that when you enter it, so they could link you to that loan. So you should always take a look and make sure you have that number before you file online for your new PPP loan.
Okay, and I just think this is definitely easier than last time. There's a lot more that's understood. The banks are ready. The software is built. So we think this is going to be an easier process. From what we've seen, it is not any more complicated than what we've presented today. So I'd say just make sure that you have that decrease in revenue, and then go submit your application through your bank.
So one question just came in. Does the PPP1 money, does that count as revenue when you're counting your revenue up? No, that's excluded. It's only revenue from sales, interest, rents, etc. It's not the PPP or any other loan. So if you received any type of loan, or you drew out on any credit line, any of that money that was received is not included in your revenue. It's only your actual revenue that you've generated.
For an S Corp, I only draw a salary of $5,000 a month. Can I include profit up to the 8,333?
No, the answer to that is no. You have to have been drawing a salary higher to be able to draw more. The reason for that is the profits are not subject to Social Security tax. So unfortunately, there were many people who were drawing a lower salary to limit their Social Security taxes. And in this instance, it hurts that individual.
How about an LLC in the telecom business? Yep, it doesn't really matter what industry you're in. What is when is forgiveness for PPP1 due? So, you know, technically you can actually apply for forgiveness anytime, but after 10 months after completing your covered period. So you have the covered period, 24 weeks to spend the money, and then you have 10 months of deferred payments, and that's the time during which you should apply for forgiveness. If you've not applied for forgiveness within those 10 months, then you will have to start making payments. Okay, I think we have answered all of this. I will provide a link to the recording and slides so you guys can have those available. You're welcome, Dan. Any other questions before we sign off? All right. Thank you very much. Thank you, Jody.
Sure. So we will, we'll be as responsive as we can on your emailed questions. Please be a little bit patient as we respond, because we have a lot of questions coming in. We're also in the middle of getting 1099s out. So if you have 1099s that need to go out to people that you've paid, service providers over $600, please make sure we get the information right away. There's only 2 weeks left to get them out. And please send in your tax information as soon as you can. We don't know if this year is going to be an extension of the tax deadline. We don't think there will be, so we need to get that in so we don't get crushed at the end of March and the end of April. Someone asked if we're taking new clients. Yes, we are. We're always happy to take on new clients. We want to make sure we're the right fit for you, and that we can provide you the service that you need. So feel free to reach out to us anytime.
I'll be in touch, Giada. And thank you very much, guys. Thanks for your participation. And we look forward to just keep the questions coming. And we look forward to helping you out. So talk to everybody soon.
Thank you.
Thanks again, Jody.
Bye-bye.